Okay, well, joining us now from Chicago is Bob Iaccino. He's the Chief Market Strategist for YourTradingRoom.com. Bob, thanks so much for joining us. And, you know, with all these bank earnings, and I'm curious, with all these bank earnings that we've got, which have been better than expected, particularly today, we got Bank of America, Morgan Stanley, should these markets be rallying higher? Should they be higher at this point?
Well, I think it will be higher, Betty. I think that's a great point. When you see the financials turn around, it's one of the best possible signs we can have, given the very small rally that we had at the end of the year last year. Toward the end of the year, I expected a small December rally, but I wouldn't commit to anything in the first quarter. I think the first quarter is going to have a very large equity rally, actually. I've turned bullish in January. The higher lows and the higher highs are encouraging to me. The strength of the market momentum is not overdone yet, but still slowly climbing, and the dollar's starting to fall, which in the short term is a really good thing for the multinationals. So I'm firmly in the bullish camp for the first quarter.
It was a slew of economic data, though, that kind of validated a little bit about what Bob's saying right now. Things continue to go up here. So the question is, besides those economic trends, are there other signs in the marketplace elsewhere, commodities, anywhere else, where you do see some confirmation of this uptrend that you're talking about?
Well, I'd like to see a little bit more strength in copper because that's obviously correlated to global home building. But I think right now it's a U.S. story. What I'm seeing is the dollar weakness. And while in much better economic times we want dollar strength, right now we want dollar weakness. That signifies the risk-on trade, which I hate that term, really, because I think that the risk is not investing in equities. I really do. So I hate calling it a risk-on trade because I don't think it's a risk-on trade. I think the risk is not earning yield over the next 2 to 5 years, which a lot of pension funds are overwrought on. They need to get yield, and the only place you're going to get that is U.S. equities. And I think that story keeps building and building, which is where I get the idea of positive momentum for the U.S. equities.
Hey, Bob, it's Julie. If you want a weaker dollar, though, you're not getting it, at least not really over the past 6 months or so. I mean, we have seen a little bit of a pullback. But, I mean, do you have to sort of be a dollar forecaster as well if you're looking at equities here?
In the short term, and remember who you're talking to. You're talking about the last 6 months, and I've been looking at the last 6 days. I do come from a trading environment rather than an investing environment, and over the last few days, today is a possible day for confirmation of $2 to $4 lower in the dollar index if I can get a close below 80.50. You'll see weakness against, dollar weakness against all the majors except maybe the yen. That might be the only place where you still see some dollar strength, but when you combine that basket, I'm looking for, if today we get a close below 80.50, $2 to $4 lower in the dollar index.
Well, Bob, I mean, if you look at the overall picture, dollar weakness, at least in the short term here, has got to bode well for the commodities, right? Everything else from oil to gold to silver. So are there any moves in the commodity sector besides copper? Is gold due for a breakout here? Is silver due for a downturn? What are you seeing?
Gold is due for a breakout up, and that doesn't bother me. Again, remember, we're looking at a macro environment where gold is an investment. It's a safety investment. Gold is the real catastrophe play. It's the hedge to me. It's not. It should never be, in my opinion, and, disclaimer, I'm not a financial advisor, but more than 10 to 20% of anyone's investment. But when I see gold collapse and I see the dollar strengthening, that is a flight to safety, not quality. Right. The dollar's not necessarily a quality currency right now. It's where you go when you want to spend on the global market, and when you want to just hide everything, you put it in the dollar.
Okay, Bob, we're going to leave it there. Thank you. Appreciate it, Bob Iaccino.
Thank you.
YourTradingRoom.com at the CME. And still